Hi guys, welcome back to another video. My name is Josh, and in this video we'll be taking a look at Air New Zealand. After what's happened last week, the stock has took a massive beating. So today we'll be looking at whether Air New Zealand is a buy at current prices. And if you enjoy content like this, be sure to like and subscribe. Follow my Instagram page as well. I post updates on my public portfolio on there regularly. Okay, and before we continue, I'm not an authorized financial advisor. Do your own research before investing. If you need specific financial advice, do seek help from an authorized financial advisor. So we have quite a bit to go through, so let's go right into the video. So last week, actually, I did talk about Air New Zealand in my 3 New Zealand stocks to watch in this bear market video. And today, this is sort of a follow-up from last week's discussion. There's my Instagram plug. If you do want to get updates on New Zealand stock market news, be sure to follow me on Instagram. 1 week ago, Air New Zealand was trading at $1.54. Okay, and that is a drop of 44% in the past month. Since the whole situation has been happening, people have been quarantining themselves, staying at home. That has led the tourism sort of industry and the airlines industry to pretty much go into a severe downturn. Okay, and it has been down 44% a week ago, and fast forward till today. So as at closing Friday, 20th of March, Air New Zealand dropped 35% to 99 cents per share. Okay, so that is a 61% decline in the past month. So very serious drops. What's really happened since last week? There has been a few updates from Air New Zealand. So on the 16th of March, Monday, they did announce capacity reductions, and that means that international flights was down 85%. And over the coming months till the 30th of June, they only operate a minimal schedule to allow Kiwis to return home. And a lot of the cancelled flights were going to the US, and as well as that, they had domestic capacity reduced 30%. So this was on Monday, okay, and it wasn't a trading halt. And then Friday happened, 20th of March, government bailout package was announced, and that was a 900 million debt facility. Government provided a bailout package. Take a look later on what this bailout package is and what this means, whether it's going to be good or bad. On Friday, 20th of March, the CEO of Air New Zealand, Greg Foreign, mentioned that the 85% reduction in revenue already from international flights and as much as 70% domestic. So domestic capacity reduced by 30% on Monday as they announced, but the real impact is actually a 70% drop in domestic revenue. So, and overall flights have decreased from 3.6K a week to under 1,500. So that is a 58% drop. So very serious things happening. And the CEO mentioned that you can't take cost out of your business quickly enough to counter that. So what he means is that revenue is dropping so fast that they can't cut staff or cut expenditure as quickly as that. And so that's why they needed that bailout package of $900 million. Okay, so you might be thinking, what now? Is the bailout good for shareholders? So that's what we'll take a look at, and whether Air New Zealand is a buy at current prices, because it's dropped a lot. So you might be thinking this might be a bargain. Let's take a look at the details of the government bailout. We have 900 million of loan facility in 2 tranches. Okay, so that's 600 million, and the interest rate on that is 7 to 8% per annum, and 300 million, the second tranche, which is 9% per annum. So the interest rates on here is considerably higher than their normal interest rate that they'll get on their fixed bonds. So Air New Zealand has bonds, and they issue that at around 4.25%. So there is a premium on this government loan here. So, okay, so that interest rate is pretty high. The debt facility will be available for a period of 24 months. No dividends, while any amount is available to be drawn under the facility, and the government having the ability to seek repayment through a capital raise by the airlines after 6 months or converting the loan to equity. So these are very cutthroat terms here, and this is sort of characteristic of a bailout package. So usually there's an ability for the lender to convert their loan into equity, so they'll benefit from any upside. And if the share price tanks, they'll still get their interest payments from that, assuming they can still pay, right? So this is quite a typical bailout package. Because the terms of this bailout package is so cutthroat, we'll have to consider how much of this facility will they actually use, right? Because the more that they use, the more cost that there's going to be, and the more value that is extracted out of shareholders into debt holder, which in this case is the government. Okay, so We'll take a look at how much of the bailout facility will be used. From the New Zealand Herald, the CEO did mention that the 900 million figure would be enough to see the airline through a few tough months. So that he doesn't explicitly say how many months, he just says a few tough months. A UBS analyst actually forecasted the cash burn of Air New Zealand to be 211 million a month from April onwards. A few months based on that would roughly be about 4 months or till the end of July. What I think is that it's very likely that the facility will be fully used or close to be fully used. And that's because of them reducing their flights. So revenue has taken a hit till the end of June. Okay, so maybe they expect things to recover after June, but there's always a chance of overflow. I'd say that there's a likely chance that it'll be fully used or close to be fully utilized. And what this means is that dividends won't get paid out. So if you're investing in Air New Zealand for the dividends, then sorry to say that you won't be getting dividends quite some time for the next year and even possibly years after that as well. So let's talk about the potential outcomes of this loan. So the government currently owns 52% of outstanding shares of Air New Zealand. The repayment of loan through revenue generated from operations is unlikely. So without drawing on debt or equity, they won't be able to really pay this off, because if you think about last year, they made a pre-tax profit of $375 million. And that was a good year for them. Everything was doing fine. Everything was, pumping. The business, the economy was pumping, and they made $375 million. So by that logic, it will take over 2 years for them to repay the loan, assuming that they can make that sort of revenue. But I don't think that will happen, because now business confidence is low. People are losing their jobs. It's very hard for Air New Zealand to generate enough revenue in the coming year to repay the loan. If Air New Zealand survives from this whole situation, the share price finds support, let's say, and the loan gets paid back through a capital raise, and the government gets their interest of 7 to 9%. What could happen as well is that the government may convert their loan to equity. Either way, the current shareholders are diluted. Because if the loan gets paid back through equity, current shareholders are diluted. If the government converts it into equity, the shareholders get diluted, because there's no way that Air New Zealand will be able to generate enough revenue from operations to pay back the loan. And if Air New Zealand does poorly and the share price continues to drop, the government would be likely to convert their loan for more shares, because a lower share price would mean more shares are issued, and that means more dilution for current shareholders. And the government might just take it private as well. They might just buy out the minority shareholders, considering that they already have 52% of outstanding shares. It won't take a lot for the government to get that 80% shares where they can force a takeover. In my opinion, right, there's a higher chance of Air New Zealand doing poorly in the coming months, in the coming years. Okay, short term, there's very low future consumption of airline travel, and I don't think it'll recover swiftly. Okay, because there's really two things here that I consider it to be harmful for the entire industry, and that's unemployment. So airline travel is quite cyclical. Depends quite a bit on people having disposable income to spend on flights. Unemployment will get rid of that, the disposable income. And also fear of traveling after this whole situation folds out, okay? Fear might stay for a while. People might not fly for the next year or two. So I think to recover earnings back to what it was a year ago would take quite some time. So that means that Air New Zealand won't be able to pay off their loan through their operations, but have to raise cash through equity raise, or the government just turning their loan into shares. So this is a cyclical stock. So Air New Zealand, their earnings does really depend on the economic cycle, and earnings will get a whole lot worse before it recovers. Minority shareholders would get massively diluted in the future, and that's just very likely considering the different outcomes. If you're wondering what I'm doing, whether I am buying Air New Zealand, I am not buying. I won't be buying Air New Zealand, and that's basically my reasons above for not buying Air New Zealand. I have spent all my AirPoints dollars at Mitre 10. So an AirPoint dollar today is worth more than an AirPoint dollar tomorrow. Why I say that is because that there might not be an AirPoint dollar tomorrow, okay? So there's a chance with that, as always. Might not happen, but I'm happy that I got stuff from Mitre 10. I probably won't be flying anytime soon either. So better get what I can now while they're still offering that ability to convert your AirPoints dollars into real dollars at Mitre 10. So I've cashed out my AirPoints dollars and I'm not buying Air New Zealand. So that shows my confidence in Air New Zealand. I might be wrong at the end of the day. Air New Zealand might go up in share price, and yeah, but this is not my cup of tea. So this is merely what I'm doing, not recommendation for you to buy or sell Air New Zealand. Okay, so I hope you enjoyed this video. Hope you enjoyed me giving you some perspective of what I think is the entire current situation with Air New Zealand. There are some stocks where you should be dollar cost averaging into if these businesses are long-term, very stable businesses. But I don't think Air New Zealand is that type of business. So I'll be very cautious if I'm buying certain stocks on dips, and Air New Zealand would not be one of them. Hope you enjoyed this video. If you enjoy content like this, be sure to like and subscribe. Follow me on Instagram to get updates on my public portfolio and other stock market news. Until next time, take care.